Hello fellow professionals, Dennis Tyler here at Absolute Mortgage with Tyler's Tips. Positive economic news has spurred a massive sell-off in mortgage-backed securities, causing interest rates to skyrocket. As a result, from the first part of May to today, FHA interest rates have risen from 3% to 4.25%. That's the most I've ever seen it increase in such a short period of time. So what's next? First, it's important to realize that compared to historical data, interest rates are still phenomenally great. Take a look at this chart. When I was much newer in the business, in the early 80s, interest rates got up as high as 16%. Historically, interest rates have been between 6 and 8%. We are still, today, 33% lower than historical rates. For your buyers to still be getting interest rates in the low 4s is great news for them. But the headlines would cause them to think differently. Take a look at these headlines. Interest rate surge hammers U.S. mortgage apps. Dire predictions for housing recovery. Rising mortgage rates swing housing sentiment. So what do you need to know in order to help your clients and to keep your sanity? First, don't panic. We're going to have peaks and valleys. That's normal for the business, and we're going to help you maneuver through those peaks and valleys so that your clients are best taken care of. Second, the bond market is what drives the interest rates. Don't pay a lot of attention to the stock market. The bond market drives the interest rates. Bonds are going down, interest rates are going up. When bonds are going up, interest rates are going down. And interest rates can change. Interest rate pricing can change multiple times during the day. Why is this important to you and your buyers? Because you want your clients to get the very best terms possible. If their lender is saying to float when they should be locking, this could cost your clients thousands and thousands of dollars over the short and long term. Now, let's take a look at the effects of higher interest rates on monthly payments. On a $240,000 loan, monthly payments go up by $147 a month after a 1% increase in interest rates. Obviously, that's enough to kill a transaction. That's when a good lender will get creative and find more ways to save your client money. For instance, we can use the MCC tax credit program for first-time home buyers and perhaps save them $180 a month on that same loan. Let's work together as a team to overcome those challenges and to help our buyers get the very best transactions that they possibly can. At Absolute Mortgage, we watch the trends very carefully to make sure your buyers get the very best that's available to them.